Program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
All right, our stock of the day is Life360 on the news that it has launched an IPO in the US. The company will be selling 5.75 million shares, intends to list its common stock on the Nasdaq under the ticker symbol LIF. With this, the location tracking app aims to increase capitalization, financial flexibility, and invest in general corporate purposes. Goldman Sachs, Evercore and UBS Investment Bank are acting as joint running managers for the offering. Life360 has shot the lights out in the last 12 months, Rudi.
It certainly came to life.
Yes, it did come to life. The old adage, you raise capital when the share price is high, they are sticking to the script on this.
That works.
Yep.
It doesn't work when you're down.
No.
Because you're diluting then. When it goes up, it works.
Yep.
Well, always good to have a good memory. Last time we were here, we talked about Life360.
Yes, we did.
And last time I was interviewed by David. I was asked about which 3 technology stocks would I recommend, and I believe that Life360 was the 3rd one I mentioned.
First was technology one.
Of course.
Second was
Webjet, I think.
Webjet, right.
So yes, needless to say, Life360 has been on my radar. I have quite a positive view about them. Same comment as last time, basically. It's from the onset, I would have not have picked it. That the particular business model they have, and it's not a free for all. But they've done so well, and they continue to doing well. And I think, you, as an investor, you just have to go with the flow.
Yep.
And you just have to trust that management keeps or continues to execute well. And I mean, their current financial year is very much second half weighted, which normally always increases the risk profile, because situation in the second half can be quite different from the first half. But I think on the basis of their track record so far, I think you have to give management the benefit of the doubt. Would I chase the share price here? No. My experience and my observations from the past few years also show that it's probably best to get on board with this type of companies when there's a little bit of a lull in the share price, when it pulls back and all of that. But that's
if you're in it, hold it.
I would definitely hold it,
but no new money,
and take the volatility on the chin,
right?
Because that's what happens with these high PE stocks.
But you know, this being exposed to the Nasdaq in the future, is that potential to supercharge the share price, take it to a new level? You're going to get a whole bunch of new American investors involved.
Well, obvious observation to make. It's essentially an American company for starters.
Yeah,
right? And it listed on the ASX. Maybe investors are not aware of that. Is that as a small cap company in the US, it has become increasingly more difficult to list. And the ASX has done a great job in profiling themselves as the technology exchange in this region. So we get some companies from Israel, even from the Netherlands and from the US listing here. So now they're basically going back to the homeland. But I mean, in a market where you have the Ciscos, the IBMs, the Amazons, the Apples, this is a midget.
Yeah.
I mean, it probably will. It might not even register on most investors' radar. So that whole Nasdaq is going to turn around the future. I'm not so sure about that one.
Okay. All right. Shawn?
Yes, interesting. We did talk about it last time. And Rudi's echoed most of the things he said last time. And I know he likes it. And he's got the long arm. He's patting himself on the back with it again.
Right.
But he nailed it. So good luck to him.
What about you? Are you continuing to pat or go into an arm lock?
No, I'll stay on the arm lock. We don't own it. And we got it wrong. We missed it. Okay.
Yep.
So it's a good company. I think it's the 8th biggest used app in America. Might be sixth or something like that. It's huge coverage.
It's It's the 8th biggest app in America.
Used app,
Life360.
Huge number of people use
massive.
it. Yeah, it's massive. There are a couple of things that come with that. As we both know, it's got the levers to get revenue going.
Yep.
At the moment, it's not, revenue's quite low. Not many people pay for it because it's free, don't forget. For the vast majority of people, it's free. but they're starting to advertise. And that's bringing the money in that way. But the levers to really turn this around are enormous. But there's also the other side of the coin, which we said last time. The more they monetize it, the more someone like Apple can come along and just knock them out of the park.
Yep.
So I do believe chasing the stock into strength is fraught with danger. And I agree with Rudi. But at the moment, as it is right now, it looks good. Could even be taken over. That just popped into my head. That's not a thought out comment, I stress. But it is a very interesting model. What they've done so far, the execution has been fantastic.
Right.
Absolutely fantastic. They've got plenty of room to pull levers, make more money, as I said before. But I am very conscious that the better they do it, the more someone else can think, oh, well, we can just roll over them like they're not existent.
So you're the same as Rudi. Hold if you're in there, but you wouldn't put new money in?
Definitely.
Or would you take profits if you're in there?
If I was in there, I'd probably take a third to half off the table.
Right. Rudi, do you do that sort of stuff? Take profits with a third? Or
Yes, I do that type of stuff, but and that's a personal decision you have to make. It can either be because you are worried that the share price is temporarily too high, but I have to caution against this one, and I'm talking from experience with other stocks. If you do that, you better be certain that the fall is large enough, because otherwise you're going to regret that the share price runs away from you, and you just took money off the table. Yeah. So I'm a little bit more conspicuous with that type of strategy, but it does happen. It does happen that I own shares, and particular smaller technology shares. They sometimes just get picked up for whatever reason, and if it gets really crazy, you go like, oh, maybe I just take some off, because if they come down by 10, 15, 20%, put your money back in, and you're doing the right thing.
We're going to see with the stock later on. If you'd done that, you'd have been kicking yourself on the bum. Like WiseTech, for example. Yeah. But I think
the one I had in mind. Yes.
Yeah. But what we can say as well, if you're going to take some off the table, you don't just take it off the table. You got to think about where you're going to put it.
Yep.
What's your plan? Because
is there a better opportunity?
Yeah, exactly. You got a lump of money. What's the best place for that money spread portfolio-wise?
Yep. Okay.
So when I flippantly say I might take a third to a half, it would be if I had something else I want to buy.
Okay.
All right. But maybe equally important, I would go and take some money off the table, but not sell out completely, because that often you will regret, because you don't get back on board.
Yeah. You don't. It's a psychological thing.
Absolutely.
Even though you say you will, you generally don't.
You won't, because you call like, oh, it's not cheap enough now, and then you don't get back on board.
Yeah. All right. Okay. So 2 holds and a take profit. Sell a third of your holding and take some profits at these levels. That's Life360, our stock of the day.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.